Where is the housing bubble? In 2019, we heard everybody saying, buyers, sellers, investors, and real estate experts, that the housing market has gone up for 10 years or so. It has to come down. 2020, same thing, housing bubble, but there was no bubble. 2021, prices were gonna go down, but it was one of the best years ever. It was a unicorn years for real estate. 2022, we heard the same thing. Where is the housing bubble? Home prices are gonna crash. A lot of the buyers waited and waited for the home prices to go down. They never did. It's 2023, and the gurus and the experts and all the people who said there was gonna be a crash, prices are gonna go down, we're gonna have the 2008 recession again, repeating with a higher interest rate. Nothing happened. In this video, I'm gonna give you some numbers to see where the market is headed and why all the gurus and the media and the negative social media companies were wrong, and they are still wrong. So if you're thinking about buying or selling or investing in the future, you can look at these numbers and make a sound decision on when's the right time to buy for you, and at least you can understand this housing market. Yes, we have been on a wild ride of real estate, and guess what? We are still enjoying the ride, or maybe fearing the ride, but the ride continues. So let us step back and look at some of the forecasts or some of the conversations that were going on a year ago, a year and a half ago. In December 2022, Henry Simpson, one of the forecasters, had this thing out. Let's look at what he said back then. He said a 20% drop in house prices, 7 forecast models tend to crash. And here are 13 other models showing the housing market in 2023. Well, guess what? This never happened. Real estate predictions is a difficult one. Housing market changes with a lot of variables. The inventory, the inflation, the interest rate, the rate of increase, the rate of unemployment. Here is one prediction that was done in May 2023. As you can see on the chart, today's real estate market, the unicorns have galloped off. Even companies like Goldman Sachs, where they have this lot of predictions and outlook on real estate market, can be wrong. Here's an example. This just came out a few months ago, and here's what Goldman Sachs says, as you can see on this chart. Goldman Sachs says that we are revising our home price forecast higher to plus 1.8% for the full 2023 versus a negative 2.2% prior and a positive 3.5% in 2024 versus a 2.8 prior. So now they're saying that the prices are gonna go up, despite the fact that they predicted, or they analyzed and they grinded that the housing market is slowing down and the prices are going down. So it's hard to believe these days what's happening. Of course, there's a lot of factors: inflation, unemployment, COVID consequences still happening, rent increases, a lot of things happening. So it's a toss-up on what's gonna happen. But all indications are that there is no market crash and that prices will only gonna go up. And we are gonna see another prediction of the forecast from what was it last year and what the prediction is now. So let's view that as well. Let's look at some more predictions that were done last year and now see what's gonna happen. So let's look at this chart. It shows the percent change in home values. According to Case-Shiller, they had predicted in the beginning of January 2022 that prices were gonna go up, and then in July through December the prices were gonna go down, and in February, March and April they were gonna go up slightly, as you can see what's happening on the chart. Well, the actual prices did go down month over month. As you know, the second quarter and the third quarter and fourth quarter were not as good quarters as the previous years, and because there was a big fear, because for the first time in history the interest rate doubled. That has never happened before. So during the second half of 2022 there was a big fear that the rates will keep on going and going, and a lot of the buyers and the sellers were in shock. So the price did go down, as you can see, actually go down. And now they predicted during that time that 2023 the prices will keep going down, but that did not happen, and it is not happening anymore. So after all those predictions, after all those false data, quote, it is false because it did not happen, all these, what we call the big companies, the gurus, the analyzers, and media companies are changing their tune on what's going to happen towards end of 2023 because what they predicted did not happen. So let's look at this final chart today. It shows that the 2023 year-end home price forecast. As you can see, the original forecast from Mortgage Bankers Association was that the home price was going to go down by 0.6%. American Enterprise Institute, they predicted a 15 to 20% drop. Goldman Sachs predicted 5 to 10% drop. And Home Price Expectation Survey had a drop of 2.4%. This was the original forecast, but now they've all changed. Of course, the numbers have changed, the data has changed. So now they're forecasting, if you go back to Morgan Stanley, they were predicting a 4% drop. Now they're not forecasting any increase in prices, so they're just saying that the market is stabilizing down. If you look at Zillow, originally they had predicted a drop of 0.7% in home prices or home activity. Now they're saying that year-end home forecast. Now Zillow is saying that the current forecast is 5.5% plus compared to a negative 0.7%. Goldman Sachs is now saying it's going to be a plus 1.8%. And Fannie Mae, which was saying that there was a negative drop of 1.5% originally, is now saying there's a current forecast of positive 3.5%. So here you have it. What is going to happen? Are the prices going to go up? Are the prices going to go down? Is there a housing bubble? Is there a housing crash? Are the interest rates going to go through the roof to 8 or 9%? That'll really, quote, kill the market, because right now the affordability index, just because of the interest rate, has dropped significantly. Add that to the increase in home price, and a lot of buyers are off the purchase power. They cannot buy anymore. So if the interest rate goes up anymore and the prices are still going up, the housing will come to a slowdown. At the same time, there's a lot of demand. And I'm giving you my personal example or a personal opinion because I'm seeing what's happening on the market. I am what we call boots on the ground. I just wrote an offer yesterday. It was a townhouse. They were asking for $875,000, 2,000 square feet townhouse in Yorba Linda. They're asking $875,000. I called the agent. There were 5 offers. So we have written an offer for $900,000, and I'm guessing that is going to sell around $920,000. Let's go back 3 years. In the same complex, same model, I sold the exact same model, 1943 square feet, 4 bedrooms, 2.5 bath, for $675,000 in 2021. That same condo today is going for $920,000. It'll go close to $920,000. I sold that house to a good friend of mine as a rental. We are currently getting rental on the 1943 square feet home or a townhouse of $3,300, which we increased from $3,200 last year to $3,300 today. But I did some research. There was another condo listed in their same complex 6-7 months ago, and the current rent on this same complex, same condo that is 1943 square feet, it's going for over $4,000 per month. So the market is not slowing down. We wrote offers on other properties. There were 13 offers on it. A house that was asking for $875,000 sold for $920,000. So despite the fact that inflation is high, interest rates are high, home prices are high, the buyer demand is very high. They are still buying, and that's why the prices are going up, because there's a shortage of inventory, shortage of homes for rent, shortage of homes to buy, and there is a lot of buyer demand out there. So let's look at some of those demand numbers for buyers. So I'm going to show you a chart from Showing Time. Here it is. It shows the buyer traffic is stronger than normal years. If you look at the showing index for June 2023, all the June months in 2017 and 2019. In 2017, the showing index was 130.8. 2018, it went up to 129.3. There was a drop. In 2019, there was a bigger drop, 126.8. Obviously, because of COVID, we could not get into the houses and a lot of the sellers did not want to show. So obviously the buyers traffic was very low. There were no open houses. There was nothing for sale. Sellers did not want buyers to come in. But let's jump to 2023. With higher prices, with higher inflation rate, with shortage of homes, the buyer traffic is at a high of 198.3, which shows that the buyers want to buy despite the high, almost 7% interest rate, despite the high prices. Like I said, I sold a condo in 2021 for $675,000. The same condo today is going to sell for $920,000. Exact same model, pretty much the same condition. So there's a lot of buyer demand out there. That's why all the gurus and all of them are showing an increase in home prices and home sales activity. One of the common questions I'm getting all the time, even today, despite the fact that there's a lot of activity out there, is, can you find me foreclosure homes? Can you find me short sale homes? I've got buyers calling me today. The buyers who call me today, I told them, call me in 2 years and I'll find you a short sale. Well, I was wrong. Now if they call me today, I say the same thing. Call me in 2 years and I'll find you a short sale or a foreclosure. So what's happening with the foreclosures of short sales and foreclosure sales in our activity? Well, I'm in Orange County, California. So I went to the CRMLS just this morning, few hours ago, which is the multiple listing service in Orange County, which I belong to. And I searched for all the homes that has a notice of default or is in a short sale or is a bank foreclosure home. Now, here's what I found. In this chart, you can see I only found 8 homes of all the Southern California multiple listing service, which includes Orange County, San Diego County, Riverside County, Los Angeles County. There are over 2,500 homes for sale and only 8 are either foreclosures or short sales, which tells you that there is zero activity as far as foreclosure goes. By the way, on a side note, on all the CRMLS, there is only 2,500 homes for sale. It used to be during the peak years of 2017, 2018, there used to be over 10,000 homes for sale. Now we are down to 2,500 homes for sale as of today, which means there's a big housing shortage, which is going to remain so. I'm going to talk why it's going to remain so in a little bit, but that tells you that there's a big shortage of homes that's going to keep the prices high and that's going to keep homes from going into foreclosure. There are no foreclosures. There is no housing bubble imminent in the next 1 or 2 years, according to these numbers, according to what I'm seeing, as we say, boots on the ground. We're talking to agents, we're talking to buyers, we're talking to sellers. Everybody is saying there's a big demand for homes. Nobody wants to sell their homes, so there's a shortage of homes. So let's look at some other factors on what could happen and why things are happening. I just wanted to take a quick second and say thank you for watching my videos. Please subscribe and make comments and also hit the bell button because I come up with videos like these every week. So please subscribe and let's move on. So here are some of the factors which I've already talked about, but I'm going to put it into a short form here. Why the prices are not going to drop significantly or not even going to drop in the 1 or 2 or 3 years. All the gurus, which they could be wrong, are now revising their forecast. Their prices are going to go up 2024. They're going to go up in 2025, up to 2027. And some of the factors, and one of the biggest factors, is there's a lot of buyer demand. As I showed you earlier, the buyer demand is significantly higher than 2019 pre-COVID days. So buyers want to buy despite the higher interest rate, despite the shortage of homes, because they want to buy a home. They want to invest in the American dream. They want to feel at peace. They want to have an asset that they can own. And a lot of these buyers have the money. There's inheritance money. There's a lot of people who have been saving and saving and saving. So there's a lot of money out there to put down payment. And there's a lot of people getting money from inheritance. So there is still a big demand, and the demand is getting stronger and stronger because a lot of people who waited and waited for the rates to go down now realize that the rates may not go down as much as 3% or 4%. They may go down to 6%, less than 6%. So they're accepting the fact that the 6% is going to be a norm. By the way, if you take the national average of the last 40 years, the average interest rate per year is about 6.5%. Of course, they've been down to 2.5% in 2021. They've been up to 18% in the 1980s, but the average is 6.7%. So right now, we're at an average interest rate. The other thing that's happening is there's a very low supply of homes, which has been so in the last 3 or 4 years, and it may be so in the next 3 to 4 years. And here's why there's a supply of homes. Number one is a lot of people refinance at 2.5% and 3%. A lot of the buyers bought at those interest rate, and those are what we call the rate locked sellers. If I have a 3% interest rate, why am I going to sell right now and get into a 7% interest rate? So a lot of the sellers who have low interest rate and all of the sellers who refinance are not moving out, which is a big chunk. So that's one shortage. The other shortage is the housing demand of brand new homes. Builders cut back on building homes because when they heard the predictions that the housing is slowing down, they slowed down because they didn't want to get into trouble of not selling homes. So they cut back on purpose. At the same time, the other reason they cut back on building homes is everything went up. When inflation went up, their cost of goods went up. The 2x4s went up, paint went up, nails went up, everything went up, labor went up. At the same time, the interest rates went up. Just like you and me, builders have to borrow money. So when the inflation went up, when the interest rate went up, the housing cost to build, to get the permits, legal bills, etc., everything went up for the builders, so they cut back. So one, we have the sellers not selling, then we have the builders not keeping up. That created a big shortage. So this shortage is going to go on because it's hard to catch up. So that's one of the things that happens, and that's adding fuel to the price rising and the prediction that there is no housing bubble or housing crash anytime soon. I'm in Orange County, California, as I mentioned to you, and if you're watching this, please make a comment or let us know what's happening in your local market, whether you're in Texas or Florida or Montana or Idaho. I'd like to find out what's happening and what you think is going to happen, because we would like to find out what is happening, because people relocate. People from California go to Florida or Texas and Arizona, and people from Arizona may have to move some other places. So please make comments. Thank you for watching. I really appreciate it.